Hello everyone, welcome to this IETA webinar on the South African carbon tax. I can see that we've got about 25 IETA members on the line, with more joining as I speak, so that's great that we've got a good turnout. I'm sure many of you will have been following the South African carbon tax for a while, and I think it was first proposed back in 2010, and it's had a number of false starts, but it looks like we're now getting very close to the tax being implemented, which is great news, and I'm sure many of you will be pleased to see these developments. We're obviously going to hear a lot more about the tax and all elements of it from our speakers that we have lined up today. Before I introduce our speakers, though, I'd just like to remind everyone that this meeting, like all IETA meetings, will take place in line with our antitrust guidelines, which you can see on the screen in front of you now. And further details of them are also available on our website if anyone has any questions about those guidelines. So, as I mentioned, we have three excellent speakers lined up who are going to provide all the latest details on the tax and offset legislation. So we're going to start with Dr. Machingambi from the National Treasury in South Africa, and she'll provide an update on the policy and the implementation of the tax. We'll then move on to Franz Rental from Climate Neutral Group, who are one of IETA's members based in South Africa, so that he can provide all the details on the offsetting requirements under the tax. And then we'll move on to Gina Downes from Eskom, who will provide a perspective from a compliance entity in South Africa. We'll finish today's webinar with some questions and answers. And you can either raise a question via the chat function on the webinar. So do send us questions as we go through the presentation, and then we'll come back to them at the end. Or you can also just ask a question verbally when we get to that part of the webinar. If everyone can mute themselves who's not speaking, that will help, and that will make sure that the sound is good for everyone on the webinar. And then without any further ado, I'm now going to pass over to Dr. Machingambi, who will provide an update from the National Treasury. So Memory, I'm just going to bring up your slides now. There we go. So Memory, the floor is yours.
Thanks, Simon. Good afternoon, everyone. It's afternoon in Pretoria. I'm just going to take you through, I'm sure you've some of you have seen the slides a lot of times, but just to give a policy context and where we are in terms of implementation of the South African carbon tax. So the carbon tax has been in the pipeline for the past 9 years, and this follows the voluntary commitment that was made in COP15. And also in terms of the NDC that we submitted within the Paris Agreement scope. So in terms of our NDC, we have a range of emissions which we're striving towards. We expect our emissions to peak by 2025 and then plateau for 10 years and then to start going down in 2036 as a developing country. And within the mitigation policy that we submitted for the NDC is scope for us to use a carbon price, particularly carbon tax, to lower our greenhouse gas emissions. And the reason why we went for a tax is because of the way our emissions are so aggregated amongst 4 or 5 major polluters, and then the rest of them have much lower emissions. And so also in terms of our national domestic policy, in terms of the National Development Plan, which is the framework for government work, we have talked about a carbon tax. And the reason why we're going for a tax is it's also, we're piggybacking on a number of tax administration systems that are in place, and it gives effect to the polluter pays principle, which is a fundamental principle within our national environmental management policy. So, next slide. Okay. So this is just to summarize the timeline. So in 2006, we published an environmental fiscal reform policy paper to just give effect to a framework on how we can use the tax system to incentivize behavior change. And we had a carbon discussion paper in 2010. We also had a policy paper in 2013, a carbon offsets paper in 2014, and we had 2 sets of draft bills, and one in 2015 and one in 2017, and 2 sets of drafts offset regulations, one in 2016 and one in 2018. And our minister tabled the bill in November last year. And since November to March, we've been in the parliamentary processes where they've had public hearings. We've also briefed the different committees of the 2 houses within our parliamentary system. And on the 28th of March, the lower house voted for our bill. So the bill is on its way to the president for ascension, and then it becomes law in South Africa. And the implementation date is set for the 1st of June 2019. Next slide. Okay, so this slide was a bit dated, but this is the official available data so far. It shows the structure of the emissions in South Africa, and you can see that most of our emissions are from energy, electricity generation, and the picture is still similar, but with slightly different numbers. For the 2012, I think is the one that they're finalizing and will put out very soon. So this is just to give you a snapshot of the main emission sources in South Africa. And also just to highlight that the sections that will be covered by the carbon tax are the fuel combustion activities, the fugitive emissions, and the industrial processes emissions. The agriculture and waste sectors are not going to be covered by the tax for the first phase, which is up to 31 December 2022. Next slide. So this gives just a framework to say what is the tax base, what are we going to tax, and in terms of, I spoke about the 3 main direct emission sources, but in terms of the emissions from petrol and fuel, petrol and diesel use, or the liquid fuels, whether it's in stationary sources or non-stationary, this will be done, this would be administered through the fuel tax regime that we already have. And the marginal tax rate is 120 rands per ton of CO2 equivalent. And we've provided measures to recycle our revenues for the tax, because we don't, as a treasury, we don't earmark revenues, but we provide measures within which we can recycle the tax revenue on. And
why do these things never work?
Sorry, and this is a phased approach. So the first phase is from 2019 to 2022, and the general taxpayer allowances. Sorry, oh, okay. Could be adjusted. We've made a commitment that after 3 years of implementation, we're going to do a holistic review of the impact of the tax on the economy, and that will inform the design of the tax in the next phase. Next slide. So this is just a snapshot of the design of the carbon tax within South Africa. So the headline rate is 120 rands per ton of carbon dioxide equivalent, and everyone gets a 60% basic free tax-free threshold. Then for the sectors that are trade exposed, we have a formula in the bill where we take your imports plus your exports over your production to look at the trade intensity. So if your trade intensity is less than 10%, you do not qualify for the tax-free allowance, but between 10 and 30%, it's a rate, it's a scale that you can qualify for, and then beyond 30%, you get the full 10% tax-free allowance. We also give a tax-free allowance of 10% for process or fugitive emissions. So for sectors like cement and glass that cannot really do much about the emissions, we provide that tax-free allowance. And then the 5% performance allowance is to encourage a reduction in the emissions intensity of production. So this looks at your direct and indirect scope 1 and scope 2 emissions, and it's an industry average benchmark that you develop. If a company is doing better than the sector benchmark, then you get the tax-free allowance. It's a graduated relief up to 5%. And there's a 5% tax-free allowance for complying with the carbon budget. So our Department of Environmental Affairs is implementing from 2016 to 2020, it's a voluntary carbon budget phase where you just submit information to them, and then they give you sort of like a certificate to say you've you've met their requirements of the information that they are gathering from the different companies for carbon budgets, and will give you a 5% tax-free allowance. And there is a 5 to 10% allowance for carbon offsets, depending on the type of emissions you have. So you find that for process and fugitive emissions, they only get a 5% allowance for carbon offsets, but for combustion, they get a 10% allowance for carbon offsets. And these carbon offsets have to be in activities that are not subject to the carbon tax. And it is a way that we looked at of incentivizing mitigation in the sectors that are not covered by the tax, and also as a way to provide flexibility for companies to be able to reduce their emissions. So when you take the total package and look at it, you find that our tax-free allowances range from 60 to 95%. So the effective tax rate then is between 6 and 48 Rand per ton. And so we've made a commitment that we will not have an impact on electricity prices in the first phase. And this will be addressed through, we currently have an environmental levy that applies to fossil fuel energy. And this is about 0.35 cents per kilowatt hour. So that is paid by electricity generators. But we're going to neutralize that for the electricity generators. And also there is an IPP levy for the independent power producers, the renewable energy premium that's paid in the electricity tariff. And we're going to neutralize those two activities to give us the zero impact on electricity pricing in the first phase. So on your right, we have an energy efficiency tax incentive that was implemented in November 2013. And it's a very generous incentive. And we made a commitment in Parliament that we're going to extend it, because it was supposed to end of December 2019, but we're going to extend it and allow companies to use it up to end of the first phase, 31 December 2022. And the other three are, we're saying we're going to support the installation of solar water heaters. We also have a basic free electricity package for low-income households, and would want to enhance that, and also to improve public passenger transport and support. Next slide. Okay, so this just talks to carbon offsetting, but I'm not going to dwell on it because Franz is going to talk more about it in his presentation. So we can go to the next slide. Just to highlight that we also had a workshop last week on the carbon offsets, and I'm sure Franz will talk about it. So this is highlighting the main comments we received in the December 2017 draft bill, which was which we looked at. So most stakeholders were worried about the policy alignment with the carbon budgets that I talked about that are being developed by the Department of Environmental Affairs, and you provided the certainty that within the first phase, we are providing the 5% tax-free allowance, but beyond the first phase, we provided a proposal that we're going to have a carbon tax applying as is within the carbon budget. So up to the carbon budget, the current structure of the carbon tax with these tax-free allowances will apply. But if you exceed your carbon budget, we're going to have a penalty tax rate for exceeding the budget. The reason why we had to give the proposal on the alignment is because in 2021, the carbon budgets become mandatory. So there was a need for us to align because stakeholders felt it was two instruments that needed to be aligned. And then I talked about the extension we've provided for the energy efficiency tax incentive from December 2019 to end of December 2022. And then taxation of domestic aviation fuels and liquid fuels and waste related activities. So in terms of the taxation of domestic aviation, we've tried to align the tax-free allowances we've provided for them with the COSIA mechanism so that when South Africa, it becomes a mandatory system in 2027, there will be a seamless transition for our aviation sector. And then liquid fuels are going to be taxed through we're going to use the current fuel levy system to tax the liquid fuels. And there was an anomaly where waste incineration was not being taxed, and we've corrected that because it is a process that's resulting in emissions. So we're going to be taxing that particular category of emissions. And there were also comments on the use of, because of the Customs and Excise Act, and how also we normally provide for, if it's an excise tax, for 2 payments of a tax within a year. So now we've listened to stakeholders. We're only going to have 1 annual payment, and we're still going to administer the carbon tax through the Customs and Excise Act because that's what we do for environmental levies in South Africa. And in terms of the just transition, we've engaged within what's called the NEDLAC chamber within South Africa. So it is business, organized labor, and government. And we were able to create a jobs mitigation and creation plan linked to the carbon tax, but this will be implemented under an overall project on the Presidential Jobs Summit. Next slide, please. So within the other tax-free allowances, I talked about the offset. We've already had 2 workshops on those, and we're finalizing. So with the performance regulations, we are going to release another set of regulations for public comments within April. And but we've worked extensively with the sectors that are indicated here when they were developing their benchmarks until the point when they submitted their benchmark proposals. And then these approved emissions, so we publish it, we get stakeholder comments, and then we'll then finalize the regulation and publish it along with the bill. And then the trade exposure allowance will also be done in terms of a regulation, and we are finalizing this for publication within April, hopefully. Next slide, please. Okay, so just in conclusion, I guess as a country, we realize that we are operating in a carbon constrained world, and we need to make the adjustments towards the low carbon economy. And this is provided for within our National Climate Change Response Policy and the National Development Plan. And the carbon tax is an important instrument to nudge action in terms of that transition to a low carbon economy. And the bill that is currently on the way to the president took into account all the stakeholder comments we got from the 2010 discussion paper, the 2 draft bills, and the policy paper that we published in 2013, and as well as the comments that stakeholders submitted during the parliamentary process. And implementation date, as I said, is scheduled for the 1st of June 2019. Thank you.
Thanks very much, Memory. That was a really helpful overview of the latest state of play in South Africa. So that was really useful. Just as a reminder to everyone, if you do have questions, we're going to do a questions and answer session at the end. So please save your questions to the end or submit them on the chat function now, and we'll come back to them at the end of the webinar. So we're now going to move to Franz Rental, who is the country director for South Africa of Climate Neutral Group. So Franz, I'm going to hand over to you now.
Thank you, Simon. Good afternoon, everyone. I cannot see the slides on the online on the screen, but it's okay. I'll just look at the slides from my desktop, and I'll just Simon just tell you when to move to the next slide. I think it's a great opportunity to speak about the carbon tax and offset scheme that's about to get off the ground in South Africa. Just quickly about Climate Neutral Group, Simon, slide 2. Climate Neutral Group, as you know, is also now a CROA member. We are a carbon management and offset provider. And we've been in South Africa since 2012. And we've traditionally worked with South African companies on the carbon footprints and carbon reduction plans. And as a result, we've also been involved and working with and alongside the carbon tax and offset developments that have taken a number of years. But it's very exciting to see that we sort of like at the just at the beginning of the tax. It's been quite a number of years, and just in the last 6 months, the pace has accelerated dramatically. So as Memory mentioned, there was a carbon offset workshop last week on the 27th of March, hosted by National Treasury. And the purpose of the stakeholder workshop was to further engage on the comments received on the draft regulation on the carbon offsets. That was the one that was published in November 2018. It was a very good session. There were more than 100 people that attended, quite some lively discussions. And we went through the regulations, and there were a number of points that needed a bit more attention, and they had to be maybe adjusted and tweaked going forward. So we indeed look forward to the updated, revised regulation that will come out in April, as Memory mentioned. Slide 3, Simon, please. Why is it offsetting under the carbon tax? Also, like Memory said, it allows for least cost mitigation options, and it's additional flexibility for companies to reduce their carbon emissions, and of course also to incentivize other sectors of the economy that do not receive other government incentives or are not subject to the carbon tax. And we really hope that there will be a number of offset projects that will now be able to get off the ground in South Africa. Slide 4, Simon. Just very quickly, this is an example of, see at the top it says based on 4 million bricks per month. This was an example of a brick company, and if they are subject to carbon tax. And as Mimi mentioned about the allowances, here you can see how these different allowances fit in. So if you got the total tax payable, then the blue graph, and then the yellow parts or the orange parts are all the tax-free allowances. The one that's interesting for us in this presentation is the 5 or 10% offset allowance. And a 5% offset allowance applies to process and fugitive emissions, and the 10% to combustion emissions. So of course you can have the situation where a company has, all three emissions, process, fugitive, and combustion. Then the 5 or 10% applies on the different emissions, right? Slide 5. So of course, why would or why should companies in South Africa purchase carbon tax offsets? So quite simply, it's an additional flexibility measure, and this will allow companies to pay less carbon tax. Depending on the price that they pay for the carbon offsets, they can reduce their carbon tax payable to the tax office by up to 15% per year, maybe a little bit more. And at the same time, they can also boost their corporate social investment and support the sustainable development goals by channeling much needed investment into tangible South African projects. And as you know, the marginal tax rate is 120 Rand per ton, and that is the effective ceiling price for offsets. And using offsets is not mandatory. The alternative is, of course, paying the tax. Also note that the marginal tax rate of 120 Rand will increase every year by the CPI plus 2%. So effectively every year the ceiling price will rise. A point that's very, very important, Memory spoke about marginal and effective tax rate. The marginal tax rate is 120 Rand a ton, but the effective tax rate, after you take into account all the different allowances, is anything between 6 and 48 Rand per ton. But it's important to note, and that's where there's been quite some confusion in the market, that your offset price does not need to be below 6 to 48 Rand per ton for it to make sense. So the tax is still 120 Rand per ton. So it's on the portion of emissions that you are taxed, it is 120 Rand per ton. So if you're buying offsets that cost less than 120 Rand per ton, you are saving carbon tax. And it's incorrect if you say that the carbon offsets have to be priced below 6 to 48 Rand per ton. So this just has to be very clear. Slide 6, which is the activities and carbon tax liability. This is also where there's been quite some confusion in the market to understand this. On the slide, you can see there's a company, the blue circle. So this will be the company's carbon tax net. Okay, this is the company's carbon tax net. So they pay carbon tax on stationary fuel combustion, process, and fugitive emissions. So the direct emissions, or what you would call scope 1 emissions under the Greenhouse Gas Protocol. This means that they cannot use carbon offsets from projects that are from those activities, because that would be double counting. So they would have to use offsets from activities outside of their scope of operations, outside of their tax net. And there you can see the green circle. These can be offset projects in a company's scope 2 or 3 emissions and beyond. So for example, if there's a company that is paying carbon tax on their combustion emissions, maybe their boilers, so they pay carbon tax on that, and they implement activities to reduce the emissions from their boilers, that means they pay less carbon tax. That activity cannot be an offset project, and they cannot trade those carbon credits with anyone else, just to be clear. But if that company does maybe a project on electricity, and maybe they set up some solar panels, those carbon credits would be eligible because the electricity is not something that is subject to carbon tax for this particular company. Now, in terms of next slide, slide 7, in terms of which offset projects will be eligible, right now it's only in South Africa. Maybe in phase 2 there could be consideration for slightly further afield, so the neighboring countries, but this is right now still only in discussion. It's nothing firm. The carbon standards are CDM Gold Standard VCS, and the reason for that is these are the most widely accepted standards globally, and it allowed, especially as the South African carbon tax and offset scheme gets off the ground, it allows for fast-tracking the process by piggybacking on existing standards and the infrastructure. Of course, there is the idea that we could have one or even more future South African national carbon standards, which might be more appropriate or applicable for the local conditions. And the idea is that a framework will be set up whereby any new standards can be assessed, whether they are appropriate for South Africa and meet the stringent requirements of a carbon offset standard. Slide 8. Which project activities are eligible as carbon offsets? So the eligible projects, you see there in the blue box, any renewable energy projects up to 50 megawatts, any projects under the government renewable energy procurement program, which was signed after the 9th of May 2013. So these are projects from round REIPP round 3 onwards. So round 1 and 2 are not eligible, but round 3, 4 and beyond, any size, are eligible. Energy efficiency projects are eligible, and that can be from buildings, residential, commercial, but provided that the company does not claim the 12L energy efficiency tax allowance. So the company would then actually be free to choose. And of course, projects in the FOLU space, waste and transport. And then ineligible projects are, as you can see, anything that is industrial gas destruction projects, nuclear, any energy efficiency that's within a company's operations that are already covered by carbon tax. Same goes for fuel switch. And then we have a green box there, which we would call transition projects. These are offsets from projects on activities within the tax net during phase 1 of the carbon tax implementation. So here, this is a little additional flexibility that has been built in, especially in the early stages of this market to address liquidity issues. Companies can, in the first phase, use offsets from within their own carbon tax net. And then offsets from projects that are already registered prior to 1st of June 2019, they're allowed in. I will speak a bit more about that just now in the next slide. And of course, offset projects that are generated after, offsets that are generated after 1st of June 2019. I will address that in the next slide, slide 9. Offset eligibility. This is a very important slide, very important to mention this. Basically, offsets that are issued under one of the carbon standards after 1st of June, there are no restrictions for use. Okay, so these are all the new projects, you could say. The second point, offsets that are issued prior to 1st of June from already existing registered project are eligible, provided they are transferred from the international registry, such as market, to the local South African registry within phase 1. And then third point, offsets issued after 1st of June from already registered projects are eligible provided they are transferred and used within 1 year after the end of the first phase. Okay, so these are very, very important things to keep in mind. Continuing on from that, I just quickly want to say something about the offset registry, slide 10. So there will be a new South African offset registry called the Carbon Offset Administration System, COAS. The design is complete. It pretty much already started in 2016. And there's a tender out for a service provider to run and maintain the infrastructure of this registry. And it's envisaged to be operational by end of 2019. And to list offsets in this local South African registry, you would need to get an extended letter of approval from the DNA. And the reason for this is that not all South African projects, or not all South African offset projects are eligible, but only some. So you would have to apply for this letter of approval from the DNA, where they effectively say that your project is indeed eligible. Okay. And together with a cancellation certificate from market or APX or the CDM registry, you would submit those two documents to the registry, and that's the point in time when the carbon credits from your international registry, the South African carbon credits in your international registry, would be transferred and listed in the, or maybe transferred is not the right word, but it would just be listed in the local South African registry. And then when the company is ready to use these offsets, they would submit that to the tax office in the annual tax return, where these offsets will be deducted from the tax payable. And that's the point in time when the offset will be retired. The last slide, slide 11, there you can just see what the process is in a nutshell. You will have so right on top you can see in the blue the usual project cycle. Credits will still be issued in the international registry for South African projects, and then if you want to get them to the South African registry, you need to apply for a letter of approval, an extended letter of approval, and cancel the corresponding volume of credits that you want to bring into the South African market. Of course, you would first get an extended letter of approval before canceling any credits, because once they cancel, they're gone forever. And so this is how the process would work to get the credits registered and listed on the South African registry. I'm sure there's going to be still a lot of questions in the Q&A, and I'm very happy to answer them then. But thank you very much.
Thank you, Franz. That was a really helpful overview, and quite a few things for both project developers and compliance entities to understand. So that was a really useful overview. So we're now going to move on to Gina Downes from Eskom, who will give an update or a perspective from a compliance entity's viewpoint. So Gina, I will pass over to you now, and hopefully your slides are on the screen now.
Hi, Simon. Yes, thank you very much. I can see the slides. If we can go to the next one. Just to mention, Eskom is the national utility in South Africa. We supply about 95% of Eskom's of South Africa's electricity, and more recently, since the Integrated Resource Plan in 2010, sorry, I'll talk more about that. There have been a number of independent power producers that have been added into the system. So if we look at some of the historical data before 2010, there were not too many IPPs in the electricity sector, and that's maybe just something to be bearing in mind about the emissions concentration in our sector. So as Memory mentioned, South Africa has an international commitment. The Paris Agreement is between 2020 and 2025, but South Africa has made clear their long-term intentions that we should peak, plateau, and decline in absolute terms from 2035. And so historically, the electricity sector and Eskom, therefore, has contributed around 44-45% of the country's emissions. And so in order to meet that Paris Agreement and any future commitments, we need to transform our electricity sector. Eskom currently, I think last year, emitted about 208 million tonnes. So we are well below what the Integrated Resource Plan 2010 expected for the sector, but I think a lot of that is due to low economic growth recently. Thank you. If we go to the next slide, Simon. So we do think that Eskom, just briefly, is well positioned to manage the electricity transformation. Everybody, I'm sure, on this group is aware of the new build projects that are currently being constructed. And due to supercritical technology, they're 30% less CO2 per megawatt hour than kind of the historical base, which is great. We also have had a good track record in integrated demand management. Sometimes that is for energy efficiency purposes, sometimes it's for load shifting purposes to manage the demand profile. And under that, we have also registered for ourselves the CFL project, the rollout of bulbs. This was somewhat prior to the previous load shedding in 2018, 2019. We also have a good track record in-house for partnerships, including renewables, things like resource mapping and testing and electric vehicles. We currently, in terms of collaboration with the IPPs I mentioned, sorry, I only have 31st March last year's dates, but already nearly 5,000 megawatts of IPP capacity on the grid. We have a good, strong track record in transformation in terms of our training, supplier development, and Black economic empowerment initiatives. And in terms of our sustainability, we do participate quite strongly in voluntary government initiatives, as well as we have representatives that do participate in the government's negotiation team at COP. Next slide, please. So, as I mentioned in the first slide, one of the key drivers in the electricity sector transformation is something called the Integrated Resource Plan. It's a plan developed by the Department of Energy, which matches demand into the future with all the various different supply options and tries to come up with a least cost plan, was the historical driver for that. Fortunately, since 2010, there have been the model does have the ability to handle environmental constraints as well. So there was an emissions limit put onto the integrated resource planning process. And that has not, unfortunately, been finalized as yet. But what you're seeing in front of you is a draft that represents the latest information that's come out of the Department of Energy. It specifies what new capacity can be expected to be added onto the electricity grid up until 2030. It seems that most of the scenarios they've looked at to 2030 are very similar, and that the real divergence comes after 2030, between 2030 and 2050. And as you can see in the bottom right corner here, all IRP 2018 scenarios do have a limit, and they decline to about between 82 and 178 million tonnes by 2050. Which at least is a really positive sign. And there is an extensive addition of PV and wind, some gas and diesel to support those operations, those intermittent operations, and then planned hydro and storage. A very new feature on this plan is the distributed generation column you see on the right-hand side, where a lot of electricity consumers are choosing to go implement distributed systems. A lot of that is due to recent increases in the electricity prices in South Africa. Next slide, please, Simon. So to the tax bill itself, we've been asked about compliance in this presentation. And just to say that in theory, we are completely ready to comply. The various components for the calculation of the carbon tax liability are already in place. Eskom will submit its second greenhouse gas report to the Department of Environmental Affairs by the deadline this year of 30 April. And we already use a Tier 3 methodology to calculate our emissions, and our self-reported emissions are audited by a third-party verifier. In the first phase of the tax, which is up to 31 December 2022, we're allowed 2 deductibles on our carbon tax liability. That's the environmental levy and renewable purchases. I must just explain the word purchases maybe a bit better. But those, the levy is already reconciled and paid on a monthly basis, and the renewable purchases are reconciled and paid on a monthly basis. And those 2 processes, again, are also regularly audited. In terms of the renewable purchases that would be deductible from the carbon tax liability, it's not the current rand value, shall I say, of Eskom's purchases. It would be the renewable purchase volumes multiplied by a renewable premium that still has to be gazetted by the Minister of Finance. So we're not quite sure what that number will be yet. And then people have been talking about the carbon budget allowance, and we are one of the companies that has a voluntary carbon budget, and we are currently within our budget allowance. If we could go to the next. So those processes are in place. So we do feel that we're ready to pay this tax. From a bigger system governmental perspective, I think what is still outstanding is the final regulations in terms of the carbon offsets. France did explain those to you, but those haven't been finalized, and there were a few grey areas I think that may be tweaked in the final gazetted regulations. I'm speculating here. I do not have any inside information. And also Memory spoke to the trade exposure and the performance benchmarks. I think given the fact that National Treasury have allowed for electricity price neutrality in the first phase, we certainly have a bit of a breathing gap to not be so concerned about those final regulations, but I think other compliance entities could be somewhat concerned. Okay, then I did mention that the renewable energy premium is still to be gazetted. And then from a systems point of view, there seem to be 2 that are maybe of concern. The one is the emissions reporting is supposed to be hardwired into an electronic system called the National Atmospheric Emissions Inventory System, or NAES. And until we sort of see the final design of that system, we can't be 100% sure that that is tax compliant. So we just want to make sure that all the dots are connected between the different entities that have a role to play in administering the carbon tax. So in this case, a company reports to the Department of Environmental Affairs. We also declare our carbon tax liability to SARS. SARS should be able to go to the NAES system to check that we are giving everybody the same number. So yes, we need that to be finalized. And then Franz also spoke about the South African registry, which here I refer to as the Offsets Ownership Repository. So in addition to that, then I think there may be some training and capacity building requirements within the Departments of Energy and South African Revenue Service in terms of the COAS and the assessing of the carbon tax, what's the word? applications. And the next step in the process, I think most importantly for companies that want to comply, is to see the draft SARS guidelines. So only once the stuff is legislated can the South African Revenue Service come out and draft some rules as to how they will assess the carbon tax submissions. And I think that may be needed to make sure that any grey areas in interpretation, and maybe more so because of the way SARS operates, are potential gaps in any paperwork that may be of concern. And my last slide, please, Simon. I think there was an explanation that there's a phase 1 up to 31 December 2022, and then phase 2 should commence from 1 January 2023. Memory alluded to the fact that National Treasury have proposed that in order to align the system that Department of Environmental Affairs plan to implement and the carbon tax, which will already be in place then, National Treasury's thinking is that the easiest way to do that, and the correct way to do that, is to charge a higher carbon tax on any emissions which exceed your carbon budget. I think from our point of view, we would have preferred to see that the carbon budgets numbers themselves replace the percentage-based tax exemption thresholds. We would have been more comfortable with that, but National Treasury have promised further consultation on that. And then in terms of the transition between phase 1 and phase 2, in phase 1, the environmental levy, the expiry of the environmental levy and the renewables rebate is hardwired into the end of phase 1. And the review will take place 3 years after implementation of the tax. So it's a little concerning that the review might look at a kind of artificial phase of the carbon tax, and therefore may draw the wrong conclusions as to the efficacy and the economic impact. And also that there should be, in my experience, it takes a lot of time to contract someone to come in and to do a review and to gather the data and to give you a report. So how that process is smoothed over to ensure the quickest feedback is maybe something for National Treasury to think of. And that's it from our side. Thank you.
Thanks very much, Gina. That's a really useful overview of how Eskom is approaching the tax. So we have a few minutes left until the top of the hour, and time now for a few questions and answers. I see that we've had quite a lot of questions raised on the chat, which is great, and quite a few of them have already been answered by our speakers, so thank you for that. A couple that I don't think have been answered so far. There was one asking, saying that the carbon tax will not influence electricity prices, and how will that work? So maybe Gina, is that one that you could address?
Yes. So in phase 1 of the carbon tax, National Treasury have allowed for the carbon tax liability that you calculate for your fossil fuel combustion. Whatever number you come up with, from that you can subtract the environmental levy that has already been paid in that period, and you can further subtract this renewables rebate number. And roughly speaking, if you look at the rough numbers, that should effectively make the carbon tax electricity price neutral for the first phase of the carbon tax. It is only thereafter that the impacts are expected.
Perfect, thanks. There was another question asking about the cancellation of credits. So there was a question asking if CERs can be cancelled from EU or Swiss registries. Franz, is that a question that you could address? And just a reminder to unmute yourself.
Hi, can you hear me?
Yeah, we can hear you.
Okay, so indeed, this is something that makes it a little bit more complicated for those type of credits. But this is indeed something that National Treasury is also in discussions and consultation with the CDM, as well as the other standards, how to streamline this process, how to make it as seamless and painless as possible, and especially for the CDM. So they're very aware of it, and it's indeed something that has to be addressed.
Thanks very much. I'll open it up to the floor now. So if there's any other questions that haven't been asked on the chat, or you may have asked them but they haven't been answered yet, would anyone like to raise a question? And a reminder, please unmute yourself before raising the question. Okay, so I'm not hearing anything. So I'll come back to a question raised on the chat function, which was about relation to projects, asking if a project issued after the 1st of June 2019. No, so does it mean that if the project is registered in 2014, but if it's issued after June 2019, will it still be eligible? So Franz, that might be another question for you.
Yes, yes, indeed. Sorry, just can you repeat that, please?
Yeah, sure. It said that if the project is registered in 2014, but if it started issuing after June 2019, is it still eligible?
Yes, indeed. So it is eligible. So you would have to transfer these credits to the local registry and actually use them within 1 year after the end of the first phase. So until 31 December 2023. So until 1 year after the first phase. So you have until 31 December 2023 to cancel the credits in the international registry and get them listed on the local registry, and then that these credits would be transferred to a carbon tax liable company. So they're sold to a carbon tax liable company, and that carbon tax liable company would actually retire them. So they would use them, they would retire them before 31 December 2023.
Perfect. Thanks very much. So there's another question on the chat asking about fugitive emissions and asking just, are these simply non-combustion process CO2 emissions? So I don't know if Franz or Gina or Memory, one of you could address that question.
Maybe Memory?
Hi. So in terms of our processes, the schedule of activities that will be subject to the carbon tax follows the IPCC 2006 guidelines. So you'll find that the fugitive emissions in this particular case refers to emissions that are categorized in the category 1B within that schedule, and it includes when do solid fuels, oil and natural gas, venting and flaring, and the other emissions from energy production that are not combustion, and from mining. Those are how the fugitive emissions are defined for the carbon tax.
Perfect, thanks Memory. And then I think our final question before we'll need to wrap things up, our final question is, are there any eligibility restrictions on the vintages of carbon credits that could be used? So Franz, I think that's another question for you.
Okay, thanks. Yeah, indeed, very, very good question. So there is no, as the regulations stand right now, just bear in mind these regulations are not final and not gazetted, so it's still, but we are almost almost finalized. So there could be some changes, but basically there's no restriction on vintages as the regulations stand now, as long as that the offsets are issued either before or after 1st of June from existing projects. So if you've got a project that was registered under the, let's say, CDM in 2012, and you have got vintages 2013 and 14 and 15 which still need to do verification and issuance, they indeed will be eligible under the carbon tax and offset scheme, provided you bring them into the local registry in the first phase. Thanks.
Perfect. Thanks very much. Well, that was some really useful Q&A there. We're going to have to draw things to a close now because we're at the top of the hour. I want to thank the three speakers who provided an excellent overview of where things are with the carbon tax. Many of us here in IETA are very pleased that we're very close now to this being implemented. We look forward to the tax and offset regulations starting in June this year. And we'll obviously bring you updates as we hear them from South Africa. But thank you once again to our speakers. Thank you to all the members who have joined, and we'll be in touch with further updates regarding the South African legislation as we get them. So thanks everyone, and goodbye for now.